Hello, good evening. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of European markets after the close, the Tuesday, the 19th of January 2016. What a roller coaster it's been. What a roller coaster 2016. Now, this video is being brought to you by courtesy of CFDs.com. Be sure to visit the website, explore the products and services on offer. There is the 25% cash bonus offer that's available, so if you are interested, message me. Email me and I'll certainly get that applied for all new trading accounts. Alternatively, visit the educational site where I post my analysis, etc. videos daily at www.cfds.education. Okay, so let's try and interpret exactly what's happened in the last 24 hours. As you know from my video yesterday, I forecast a rally, and that's exactly what occurred, and I explained the reasons why. Okay, now today, it's been tricky. I am still up for the week, still 160 odd points, although I've been stopped out in the FTSE long from the 73 region at 43. And I do have two longs on the Nasdaq and the Euro stocks at present. How do I interpret the events? This is a good question. Okay, so first of all, let's try looking at this market from a chronological point of view in terms of fundamentals. Okay, so overnight Asian markets, we have a rally in the Shanghai, the Hang Seng and the Nikkei, based on the fact that Chinese data is not as bad as everybody made it out to be. Okay, all this basically doom and gloom and the naysayers, etc. The situation wasn't as dire as everybody, like I said, forecast. The Shanghai obviously subsequently rallied 3.25%, so a very impressive rally. So if I bring up the Shanghai, you can see here we've certainly held that double bottom, which I expected we would. Okay, now what is the next step or scenario? Basically, the next step is to close this gap above. But given the price action in the US markets today, it really is being tested. Let's put it that way. My bias is still bullish, and I'm still expecting this gap to close here. But given the price action or the characteristics of the US markets, and I'll do a separate video on US markets as well. Although I am sticking with my analysis that we have seen a potential bottom in oil, and we should obviously that should propel the FTSE 100, especially given Mr. Mark Carney's comments today, should propel the FTSE 100 higher. Even though yes, I have been stopped out my long just now from 73. But we shall see. That's mainly due to the price of oil, though, rather than Mr. Carney's comments. Okay, so Shanghai certainly a double bottom, certainly holding that support region. Okay, the Nikkei, where art thou, Nikkei? Here we go. Okay, Nikkei holding that double bottom. Ever since we've closed that gap, certainly is acting as a support region. And we had some stimulatory and basically pro equity comments out from Mr. Arby as well overnight. So that certainly helped as well. Okay, now. With regards to the actual dollar as well, Mr. Bernanke's comments certainly helped the dollar, and that's one of the reasons why the euro is moving higher, and that's probably and also the reason why we're seeing a damage in the European equities, which I'll come on to shortly. Okay, so basically the theme is stronger Chinese data, stronger than expected Chinese data, because everybody thought it would be dire. Okay, it basically came out in line, so this whole doom and gloom regarding China certainly is overblown. Okay. And therefore we expect a rally, okay? And that's exactly what happened, because the markets had sold off and it was a short squeeze, etc. And that's exactly what transpired, okay? In terms of economic data from the European session, we had the ZEW come out better than expected in Germany, which was good, okay? Both came out better, economic sentiment and current situation. The ZEW data out of the Eurozone certainly did not come out, didn't basically worse than expected. But the construction data certainly made up for that and compensated for that, so that certainly was bullish. CPI certainly came out in line. German CPI during the day, we had German CPI come out as well. That wasn't obviously as strong as the ECB would like, to a large extent, and there was a slant towards obviously a dovish slant on the price of the Euro USD. Okay, and obviously that then sends the markets higher. The other conundrum that we had was the RPI and the PPI and the CPI, basically the inflation data out of the UK, that actually came out stronger than expected. So given the fact that Mr. Is now, forgive me if I've not pronounced his name correctly, Mr. Villay, if I can remember this chap's name, Villay, VILLEGHE. Basically, his commentary yesterday was the fact that we are going to be embracing negative rates, and that obviously sent sterling lower, which obviously propelled, well, it should technically have propelled the equity markets higher, which it did really because of the fact that China helped it as well. So it was a double whammy from that perspective. Okay, obviously today's inflation data certainly questioned that motive or questioned that philosophy and that thought process. Obviously, Mr. Carney entered the foray, and he basically stated that we are not going to see interest rates rise anytime soon. That certainly obviously put on the dovish tilt. The dovish cap was back on again. Obviously, central banks certainly seem to be backtracking now, going into damage control, and that certainly should be bullish for European equities. Okay. And that wasn't the case, unfortunately, as we can see the FTSE is now languishing back at the 5850 level. Okay. Economic data out of the US, nothing to be seen. Now, the concerns that we have, number one, in terms of the bearish arguments, IMF downgrades global growth forecasts. I mean, how many downgrades have we had? How much have we priced in the Chinese downgrade? I mean, it's just regurgitating all the information. Yes, it certainly has affected the market to a certain extent. But then one has to question yourself and say to yourself, stock market's already down more than 10% on global growth concerns. Do we really need to be worried about global growth and attempting to discount further global growth deterioration? That's not the case. Okay, that's not the case. So, yes, it did affect sentiment to a certain degree, and also the concern with regards to Italian banks being insolvent, etc. That certainly seems to be hurting sentiment as well. Now, there are a few other variables out there that certainly are helping or certainly denting sentiment. European banks lack capital buffers, ECB reviewing bad loan guidelines. So there is some concern with regards to that as well. But having said that, again, folks, I mean, ask yourself, if you bring up the chart, the German DAX, look at how much it's been clobbered. Just bring up the daily chart. I mean, you have an unfilled gap there, unfilled gap above. You have a pivot high there of 10,800. And now we're down to 9,400, 9,300. So you need to ask yourself, I mean, all that bad news is pricing. That's my interpretation anyway. I may well be biased in my observation and my view at this current juncture because I have two long positions. Certainly take that into consideration. But from my perspective, even if I was neutral, I would not be looking for the short side. I'd be looking for the long side, okay? Especially after Mr. Carney's comments with regards to obviously a delay in interest rates. And it certainly seems to be a theme, especially with Mr. Bullard last week as well, that the central banks are certainly backtracking and are going into damage control. Okay, right. Now let's have a look at the technical positions now of all markets. Let's start with the German DAX. Okay, so we've held the gap fill. Gap fill at 9,550, certainly building a potential base there. 60-minute chart, German DAX, you are looking at a potential inverted head and shoulders formation now. So if I just take this here, connect it to across, your left shoulder is here. Your head obviously has gone in already, and you're looking for a right shoulder before we start to move higher. We have an unfilled gap above that certainly needs to be closed. Okay, so you have an unfilled gap here at 9,960, and then obviously you've got a gap at 10,220. So you have to ask yourself the battle of the gaps: is the gap above going to close or the gap below? From my perspective, the gap above. Why? Because of Chinese data. Asian markets into support. Chinese data certainly come into the equation. The other factor as well, obviously, is oil. Oil seems to be very, very. I mean, the market certainly seems to be very, very, shall we say, sensitive to oil. Okay, so whichever way the price of oil moves, it generally tends to move, regardless of the logical conclusion, etc. So basically, we're looking at the support level here at 29.6, potentially holding. Okay, and a potential pivot low being put in. 60-minute chart, you can obviously observe that as well. So very, very important. And you are looking at a potential base being built. Now, given the fact that the oil price has absorbed the bearish argument from, obviously, global IMF cutting global growth concerns, general global growth concerns, obviously the excess oil supply, the Iranian situation, etc., etc., and yet still we're holding that support zone. That's certainly a bullish argument from my perspective. The other factor as well was Mr. Bernanke's comments during the day, which a lot of people missed, I think, in terms of him talking the dollar down. Okay, he certainly attempted to talk the dollar down, stating that it certainly seems to be overbought. Now, when Mr. Bernanke has bought out the woodworks, this certainly is an agenda there. Okay, so dollar debauchery on its way. Now, the other factor as well, as you can see with regards to Brent certainly is a key. There is a potential for an inverted head and shoulders formation forming now on the 60-minute chart. So again, we've not made lower lows. Okay, if anything, we've made higher lows, and therefore that's bullish for oil, and that should be bullish for equities as well. Hence the reason why I have a long Nasdaq, and I've from the 4150 region, I have a long Euro stock from a 2960 region. So I'm expecting higher prices. Okay, this is my analysis, this is my arguments. Be sure, I mean, you're more than welcome, obviously you're watching this video, you're more than welcome to obviously delve into my thought process, and I hope it helps your thought process too when you are looking at potential trade sales. Okay, so unfilled gap, what we're going to target here is at 9960, 9950. Remember, previous support equals resistance and DAX at 9800. I've explained to you that oil prices are looking bullish and certainly are looking to move higher. If the market is so sensitive to oil, then you are looking for a potential move higher. Add in the fact that you had stronger German data, add in the fact that you had overall European data was okay, wasn't as dire, and Chinese data obviously strong. Carney was obviously dovish. That is one hell of a cocktail for a short squeeze, and yet we failed to see it. That's the concern that I have. But again, like I said, I'll put that down to the IMF spooking the markets, and obviously the Italian bank story as well. Okay, right. So inverted head and shoulders formation of German DAX. So bear that in mind on the 60-minute chart. The 10-minute chart. Let's just observe this here at present. You have an intraday double bottom being put in here at 9630. So that certainly needs to be respected, folks. Okay, horizontal support below, and obviously an unfilled gap below as well. So again, that certainly needs to be respected as well. So we shall see how the markets trade. Okay, like I said, you have a horizontal resistance at 9860 and then gap fill support at 9962. Okay, right. Let's cross-reference that now with the MDAX 50, which I always do. As you can see, daily chart, MDAX 50 is into support. Therefore, from my perspective, the German DAX remains bullish. 60-minute chart, the German DAX, you can clearly see same type of pattern. You have not made a lower low today. You've put in a higher low. Hence the reason why I'm baffled as to why the Nasdaq is so weak. If I just show you the chart of the Nasdaq at present, you can look at the Nasdaq. Go to a 10-minute chart quickly. Okay, so Nasdaq has closed the gap. Inverted head and shoulders formation, projection target 4255. Hence the reason why I'm bamboozled as to why the European markets fell after hours. So again, that's what your stop loss is for, to protect you, etc, etc, and that's basically where we stand. Okay, inverted head and shoulders formation looking bullish, gap fill looking to potentially move higher. S&P 500, exactly the same situation. I did not expect the gap to close in the S&P 500 given the fact that you had stronger Chinese data and the Shanghai was up by 3%. Now that gap will certainly hold given the fact that the Shanghai was up by 3% overnight, Nikkei was higher, and overall Chinese data certainly alleviates any global growth slowdown concerns. Okay, right. Going back to the German DAX now, MDAX 50, tech all share. This is an interesting scenario. We certainly had a bullish engulfing candle. So again, ever since we closed that gap below on the tech all share, we are looking to potentially bounce. So bullish engulfing candle, healthy sign. Capitulation of shorts and capitulation of the bears. The bulls are certainly back in the market. Okay, back in the money. So DAX certainly, from my perspective, certainly remains bullish. The volatility index on the CAC, as we all know, volatility generally refers to fear. The fear gauge has hit resistance, and therefore it's bullish for the French CAC and European equities in general. Okay, the restocks as well. Mini, you're looking at the weekly chart here. Let's just go to a daily. Daily, you can see that we've come back and reversed, and certainly showing early signs of a weakness. 60-minute chart, you can see that double top, and obviously we've pulled back. Okay, now the CAC itself, CAC 40. Let's have a look at the CAC 40. Okay, so we've held that double bottom. You have this falling, expanding, expanding wedge, sorry, and you are looking at holding support, double bottom on the daily chart. 60-minute chart, the French CAC itself. Again, you've put in a higher low. You have not put in a lower low, broken at the falling, contracting wedge pattern, so that's a good bullish sign. 10-minute chart of the French CAC itself. Obviously, we've held that support zone here, and we are looking at potentially moving and thrusting higher. So again, that's going to be interesting. We have an unfilled gap above that needs to be closed, and that will be our target in the interim. Okay, the unfilled gap below I don't expect to close, given the fact that, like I mentioned before, you have the concept of the Chinese market certainly basically exerting a bullish slant. Okay, the Euro stocks now, inverted head and shoulders formation, broken out the falling contracting wedge pattern. We've retraced up to 38% from the low to the high. The right shoulder's in, off we go to the races. Hence the reason why I'm long the Euro stocks. Okay, the QE story is still alive from my perspective, and given the fact that the Euro USD now is into that resistance at 1.0930, it's always important to look at the Euro USD, folks. Okay, always important. There's an inverse relationship with the Euro USD, so always bear that in mind. The inverse relationship with the Euro USD, what is it? Good question. Okay, and something that we can discuss. Now, 3 reasons why the Euro USD climbs. There's a good article, and this is generally known. Okay, number 1, the market is obviously expecting the continued negative conditions make it more likely the Fed backs away from the rate hike cycle. Obviously, we all know that, and the ECB delivers something new and substantial, and that's the reason why, one of the reasons why the Euro USD is moving higher. There's also hot money that's flowed into the United States and is leaving on economic uncertainty. So again, that's not a good sign. Finally, the euro is a carrying funding currency and that unwinds on risk aversion. So that's basically the real reason why we're seeing this rally in the Euro USD, and obviously you've seen weakness in European equities. Okay, so Euro USD is the anti-QE trade. The euro goes higher, European equities go lower, and vice versa. It's basically the QE trade that was apparent in with the yen and obviously with the dollar as well. Okay, and obviously to a large extent the Chinese yuan, but the market certainly hasn't reacted well to that because of the currency war and loss of trade. Okay, now Euro USD is into that resistance zone at 1.0930, and that bodes well for European equities, and therefore I am expecting a move higher. Okay, given the fact that oil is obviously into support, etc., etc. Okay, now going over to the Euro stocks itself, again you have horizontal support at this 2970 level and 2960, and then obviously you've got fill at 2935. Bringing up your 60-minute chart, you're aware of the inverted head and shoulders, and the 10-minute daily chart, has recaptured that support zone and is looking to potentially move higher. Okay, now going over to the FTSE 100, go to the daily chart. Daily chart obviously has held support, bullish engulfing candle, certainly a healthy sign for the FTSE 100. 60-minute chart, you have this inverted head and shoulders formation. Again, that's a healthy sign for the FTSE 100. 10-minute chart itself, you have not made a lower low, you haven't tested the previous lows, and you are looking at making a higher low and looking to potentially thrust and move higher. So my summation basically is that European markets certainly are set to move higher and remain bullish, and that's really the summation, folks. So trade well, and I'm expecting further move higher. Goodbye now.